So just like every normal person, I spend a lot of my spare time looking up and reading academic studies about markets and indicators and things, right? That's something we all do. And I just kind of wanted to show one that I saw that was interesting, and then my process of how I look to test and validate and generate ideas from this, because that might be helpful to some of you as well that are doing the same thing, or want to get into doing the same thing. Now, if you don't, just know that this is all the work that goes behind the scenes over at StatsEdge Trading, in which this is what I spend my time doing, right? My trading is on Rails. I wait for the Discord alert bot to yell at me and say, hey, here's a trade from a system to take a look at. And in the meantime of all that, I spend my time looking to build new and better systems for myself and for the members of StatsEdge Trading. So if you haven't give that a shot, right, come on over to your StatsEdge Trading. Free newsletter, free trading course. You can check all that out. But this is the study that I want to talk about today. And this is a mean reversion using the true strength indicator. And I haven't really played with that before. So let's just kind of go through the process. First, I know with AI, you could just dump it into an AI, and, I'll show you how I do that and learn more about it that way. But first, I actually want to read it myself. I think there's still some value in that. I think that will be a little bit of a lost topic, but we take a look. And the idea behind this is they use the Qs, and they use the SPY, and they use this true strength index. And one of the reasons that this stood out to me is I've never used this indicator before. So maybe this is something that I can build a back test on, or add to my library of columns, something we talk about all the time on the Line Your Own Pockets podcast that I do. If you don't listen to that, you should check that out. You can use it for optimization purposes as well. So, methodology and all that, I won't go through it. But one of the main things that was interesting is doing this mean reversion. They had really good results when it came to trading this thing. So the blue, red, green line here, this is the system versus the S&P 500, and outperforming the S&P 500 in good years, performing similarly, I would say. But the beauty of it is the drawdown periods, it really did a good job avoiding. So that's what really kind of stood out to me. So, read through the study, read their methodology, which is very important because you could make any back test look great, to see if this is something that actually made sense. And then from there, I just went in and I used this LLM. So this is NotebookLM. I really, really like it. You can make a podcast where it has two kind of annoying sounding people, but they're just talking about it. This is where I'll put in these AirPods that you see, and I'll take the dog out for a walk, and I'll listen to kind of the methodology behind it and all of that, just to make sure that everything makes sense the way it does. And it can also make some pretty cool infographics. So let's do slideshow and presenter view. So I had it make, what are the benefits of this, and how does it work? And it's comparing the close of two EMAs. And if that gets a little bit too out of whack, then that's when a trade is taken and saying, hey, this is a little bit too far. And what I liked about it is that it is double smooth. So it's going to cut out a lot of noise of some other indicators that can cross from overbought to oversold very, very frequently. This one kind of smooths out. But again, I'm not just going to rely on their back test. So next, and what I do is I go into my real test GPT. So we're using a lot of LLMs in this one. And again, I know some people don't like these things, but why not? So I went in, I said, okay, let's take a look here. And I gave it some things to look at. And I basically said, hey, I want to build, based off this true strength index, a basic trading strategy with tons of positions. I always start with a huge amount of positions. So this could hold up to 5,000 positions at a time. And I just started playing with it. And I said, okay, well, this works on indices. Maybe I'll look to recreate this model and make it available for StatsEdge Pro members with some of my own tweaks in it. I want to trade individual stocks as opposed to indices, which this paper was written off of. So I take that and I load in the 25 years of data I have, and I can start to apply, and I can start to run and test these things. So I went out to weekly charts because I like to use weekly charts quite frequently for my swing trading, because I'm just looking to buy and then sell a week later. And then I was able to go through and kind of run my own back test. So just a reminder, this is the back test that was run using their system on the S&P 500. And again, it looks really, really good. Again, this is something that if I'm going to bring up to StatsEdge Pro members, if they're interested in this, I could take a look at it and see how it performs on a basket of ETFs. But then I went and I grabbed it in the individual stocks. And this is very unrefined. I haven't done a whole lot of optimization with it. But what I did is I added a stop loss and a profit target, because if we're doing mean reversion, my philosophy on mean reversion is we want to, take a trade and then we want to get out pretty frequently. Plus, I just wanted to prove the methodology. I wanted to prove that this indicator could be used for some mean reversion. Now, this is nowhere near as good as our current mean reversion system. It's a pretty decent system if you take a look at it. You go through and you say, okay, well, on initial tests, being able to hold up to 5,000 positions at a time, it does pretty well. And you see 2008, it's actually up after 2008, which is great, because if we remind ourselves what the market looks like, if we just look at the market here, all of 2001 and then 2008 right here, this is all the dead decade, the lost decade they call it, where through 2000 you had the dip, and then 2008 you had the other crash, and you ended up not doing anything. So the fact that we can end up just hanging out and making a little bit of money, any money during that dead decade, is great. Then I also like to always take a look at what happened in 2020. It didn't really react much in 2020, which is also great. And then 2022, 2023, those are the big kind of bear markets that we've had in this last 20-year period. We've had about 6 or 7, I'd say, really big bear markets. So I'm really focused on those and how did it work during that period of time. That is the risk of mean reversion, is that you're by definition buying things that are selling off. So then from there, we can go and just take a look at some individual symbols and see, does the technical analysis of this actually look any good? And I've got a couple here. So this one is FMC Corporation. This is a couple days old when I took the screenshot, but it looks pretty good. So, you take these things and you start adding them together. The paper did its own research. I validated it with my own research after reading the paper and understanding their methodology and making sure their methodology wasn't any funny business. Right. Then from there, I did my own testing on individual equities, the instrument I trade the most. And now I'm going to take a look at this as well. So it's definitely at this point gotten to the point where, yes, I will add it to my library of columns, which means that when I run a back test and I run my optimization, this is potentially something that could be optimized against. But then also, I just think it did a pretty good job of just showing me that, yes, there could be a strategy that could be built here. So that's what I'm going to be doing for the rest of the week, and that's what I'm going to be spending a lot of time on. This goes into a slot, into a ranked order list that I have of strategies to potentially create. And if it ends up being good and ends up being something that I'm comfortable putting my own money in, then it will be part of StatsEdge trading system. So just a little video about how a systematic trader thinks of it, thinks of trading in general. Most traders, when you're a discretionary trader, you're always thinking, what's the next trade? What's the next idea? What's the next potential stock I could buy? As a systematic trader, we're thinking more broad strokes. Oh, this is something cool that I read online. Now let me validate it in a bunch of different ways, which you just saw. And then if so, okay, now let's really get into the nitty gritty of optimization and which of these we think will like the best. And I'll go through tons of different examples of trade ideas that is given me and try to figure out what it is that we could potentially do with this. So again, if you're interested in this, that's a simple process that I think you could take and work for yourself. If you just want the output of a process like this, that's what I do at StatsEdge Trading. I have a lot of fun doing these things, and it's what I consider work. The actual trading part of things is the easy part. It's the developing and building new strategies that I really focus on. You can get all that over at StatsEdgeTrading.com. And until I talk to you guys next time, get away from the screens.